Okay, so did you see my presentation screen?
Yes. Yep.
It's always a bummer when you're showing the presenter notes one. So awesome. Cool. Well, hello everybody. My name is LaVonne Shields, and I am a excuse me, accounting strategist. My company name is Management Consultants of America, and I'd like to welcome you to Dollars and Cents. So let's talk business. My intention is to provide information that will help you build, grow, and lead your business so that you can fulfill your purpose and leave a legacy for future generations. That's actually the mission of my company is to make sure that business owners are able to fulfill their purpose and enjoy what they do. So I appreciate the opportunity for being here to speak with you guys today. So a little bit about me. I started managing money at the age of 9. Very interesting Girl Scout cookie story. It's just that's where it started, and that's how I found my passion for money management. I do have a bachelor's degree in accounting, and I'm a registered tax preparer with the state of California, where I'm located, and I'm also QuickBooks Pro advisor. I used to say how long I've been using the software, but I decided to no longer do that. But I have been using it for quite some time. A little bit more about me is I'm also married. I have 3 grown sons. Well, yeah, grown sons. My youngest one turns 21 this year. And we also have 5 nephews, and they grew up together practically like siblings. They were always either at our houses or across their cousins' houses. And then we also spent 8 years in youth sports. I say all of this because it's part of kind of how I present. But having these 8 boys plus the 5 or so transferring through as we would do sports, you learn a lot about yourself in that aspect of it. And what I knew at that early stages was that I did not like the sport of baseball. I thought it was a sport that just didn't make any kind of sense. So I was very, very disappointed when my cousin set us all down and said we need to take over our local baseball league. And I looked around the room and I said, well, I'm the only one in the room who actually took French as my foreign language in high school, and I don't think you're using that word we correctly. And no one thought that I was, everybody thought that, it was a good idea to go for it. So we did. And I got to tell you, I ran from being involved in the sport at all. I actually, altogether, I actually started working in the snack bar, and that's how I kind of got engaged at my level with the sport. So I used to just sit in the snack bar all the time until, as board members, they asked us all to come and learn how to keep score because we needed an official scorekeeper at all of our games. And I got to tell you, that was the game changer for me. So, one of my favorite business books in the world is Michael Gerber's E Myth Revisited. And I love this quote. Most small businesses are started by technicians who are having an entrepreneurial seizure. What does that mean? That means in most situations, we start our business because we find a passion in what we do and we want to be able to share with other people, or we're convinced that we can definitely generate income from it because you should always do the thing you love to do. That's at least what my grandfather taught me when I was growing up. Find the thing you love to do, you never have to work a day in your life. We start a business because we have a skill that we're actually quite good at. And again, we think that it's going to be a great way for us to be able to generate income and support our families. What we tend to not do in most situations is actually understand the business behind the business of what we do. We don't understand that what the most important law of business actually is. And what it is business is a game. It is a game of strategy. And so what is a strategy? A strategy is a series of decisions designated to achieve an overall aim. So when you're talking about business as a strategy, it is a game, a sport that you play where it's all about knowing how many steps ahead of where you are you can see. And as a business owner, as the CEO of your organization, you should be able to see quite a few steps ahead of yourself so that you can manage and you can play your game successfully, so to speak. So then what is accounting? Accounting is actually how you keep score in your sport, in your game. Accounting is also, it's a unifier. It's where your stats are kept. So if you think about a banker, a tax preparer, a business coach, they see several different types of industries. They see several different models within that industry. They see several different businesses who are utilizing that model in those industries. There's not too many ways that you can I mean, since we're all designed to compete, so to speak, with each other, the only way that you can actually score one business against another one is based off of the numbers. And the numbers, being able to use the numbers as a strategic tool is really the best way to play this game. So business is a game, but it's not a game of actual numbers. It's a game of human behavior. It's a game of how you're making your decisions. And accounting is the scorecard that will help you manage to let you know if your behavior is actually profitable or not. Because the whole point of being in business is to be profitable. So when you're playing the game of business, you want to make sure that you understand that you're able to read and utilize your scorecards. So what are your scorecards? You've got your financial reports and you've got your financial KPIs, key performance indicators. If you make it a point to understand and utilize these scorecards, you are now ahead of the game and looking at your business from a CEO level and being able to strategize to get to your end goal, your aim. So what do these scorecards tell us? They're letting us know from a marketing standpoint, are you effectively reaching your target market? Are you doing what you need to do to make sure that you are touching the right people so that they can actually come into your door, so to speak? From a sales perspective, they're letting us know if you are able to successfully convert those prospects into client. Are you actually taking the being able to benefit from getting those prospects through the door and being able to convert as many as possible into actual clients? And from an operational or production standpoint, it's answering the question of, are you running your business efficiently? Does your business stand? Is it scalable? Does it have the capability of having some longevity? All that gets answered when you're utilizing your scorecards for your game of business. So what else are your financial scorecards telling you? So they're also going to show you how well you're able to generate income and cash. And I say that because those are technically two different things. The ability to generate income is your ability to actually convert prospects into paid clients. That's collecting income, collecting cash for the sake of being able through sales, should I say. But you can also generate cash from other formats. You can borrow, you can get investors. So it's just by way of how well do you generate it and how well do you manage it. And then also your ability to repay debt. It's going to show, are you capable of taking on debt? Is this a good time to be able to take on debt? Should someone look at you as a good risk to be able to loan money to you? They tell us the overall health of the business. How strong are you? How well can you weather the storms? And now we all know that we are going to be moving forward. The new normal is going to be, have you kind of pandemic proofed your business? Is your business able to actually function if in a case the world shuts down again? Like this is 2020 was just 2020 and 2021 have been just some of the craziest times. And it also helps you identify problems. What I like to say is it helps you see smoke before it becomes fire, because you're looking at these information, you're looking at these scorecards, and you're letting you know, okay, how well am I doing? Where are my pitfalls? What can I see a couple steps out that I should be mindful of, so I can either try to avoid it or prepare for it in some way, shape, or form, so that I can keep this party going, so I can keep being able to play this game as long as possible. Just want to take a quick pause right here. If you have any questions, please feel free to put your questions into the chat. If you are not in a position to where you can do that, please feel free to unmute and ask any questions that you like. This is interactive. I like to engage with people, and in Zoom it's a little difficult because I can't see everybody, and I'm hoping that I make sense. So if I can't see your head bobbing, or if I can't see if you make a weird face, I'm hoping that you will be able or feel comfortable enough to unmute and let me know. Hi, Natalie. To unmute or to ask questions if you need me to reiterate something. So financial scorecards. This is the important part of being able to play your game of business. So how do you actually read your scorecards? This is where this part of business that many business owners try to avoid. It's that accounting part. It's that part where you guys, in most situations, the business owner I just wait till the end of the year, or I wait until it's necessary for me to put my things together, my finances together to deal with it. I don't do accounting. And whenever I hear someone say, I don't do accounting, I find that to be so funny, because if you know how to keep a roof over your head, clothes on your back, and food on your plate, then you've been doing accounting. The question is now do we do it from a strategic standpoint, since you are the one that's 100% in control of your business's success, or of the success of your business? So being able to understand these areas where I'm getting ready to go into that are a bit on the accounting kind of techie side, I'm hoping it's going to definitely make it. I'm hoping that it's going to improve the way that you understand accounting, so that you can use it as a strategic tool to build, lead, and grow your business. So let's get to it. Chart of accounts. They're now called categories in certain situations. It's the listing of how your money moves. This is the core foundation of being able to set up an accounting system, to be able to use that information so that you can strategically run your business. So we're putting a dollar value on the decisions that you make. Are you buying inventory? Are you paying rent? Are you putting gas in your vehicle? Are you buying supplies? Are you paying for staff or contractors, cell phones? What's going on? What are you doing? And let's put a dollar value on that. They're the items that pop up on the financial reports. So when we read your financial reports, they're going to be based off of your chart of accounts. And your chart of accounts should be based off of what you're doing in your day-to-day activities, the decisions that you're making on a regular basis. They're also used to create your key performance indicators. You're going to be looking to these line items to be able to help you determine where things are, and how to identify when they're going very well, as well as to catch them before they become a problem. And most importantly, they should be based off of your tax return. Why do I say that? In many situations, we got in the business because we had a creative way to do that voodoo that we do, that there are people out there who weren't getting. So we found a way of doing something very creative and are hoping that people will literally buy into our vision. That being said, when it comes to your numbers, that is not where you want to be creative. That's technically called fraud. So what we want to do is want to make sure that you are organizing your decision-making parameters, for lack of a better term, based off of how the IRS wants you to report this information. Because the bottom line is that at the end of every year, we are supposed to be presenting to the government our proof of what we've done, and it needs to make sense. They need to be able to understand it so that they can, go on about their business and hopefully go harass somebody who is doing something illegal and kind of leave you alone. So we want to make sure that all of these things match up, and we'll get a little bit deeper into that a little further in. So, and then to let you know, when I was talking about the scorecards, your tax returns are part of your scorecards. So your financial reports include your tax returns. Those are part of your scorecards. So how do you categorize or separate your accounts? They come into two different main types of accounts. You have your profit and loss accounts. So this is where we're talking about your income. How do you break your income down? My business, I provide three main services. I provide outsourced accounting services, I provide tax preparation, and I also provide business coaching. So those are my three main streams of income for my business. Now, I also provide I have very specific services and products that I offer underneath each of those business streams of income. So for my accounting, I have several different ways that clients can come play with me. They can come play with me for a project base, meaning we're getting some stuff done so they can get taxes done, or they can come play with me on an annual contract base where I'm helping them manage their finances. And even in those aspects, there's several different levels of being able to work with me. So I wouldn't list all of those on my chart of accounts. I would be looking into how I manage my systems to help me keep track of how many annual contracts do I have, how many project-based contracts do I have, and things like that. Same thing with taxes. I prepare several different types of tax returns: individuals, corporations, LLCs, nonprofits. So I'm not going to list those on my chart of accounts. I'm going to allow my systems, my operating systems, to let me know how many individual clients do I have, how many corporate clients do I have. However, big picture, I will want to know how much am I generating an income from tax preparation, so I can make an educated decision on if tax preparation is a good idea. So all that to say is your chart of accounts should be a very condensed list of about 17 to 20 so types of line items. You can stretch those out a little bit, but as far as core line items, they shouldn't be that deep. So I use income as the main example because that's the one where people can get very, very overly detailed when creating their chart of accounts, and it becomes overwhelming when you're trying to look at your reports. So your income line item should be based off of your core streams of income, and maybe, keeping track of it. I always like to hold on to an uncategorized income and expense account just for the not quite sure. So we're kind of playing it by ear kind of moment. Your next category or type of accounts underneath the profit and loss accounts is your cost of goods sold or your cost of sales. What this is identifying what are the direct hard costs associated with you generating your income. These two, from your income and your cost of goods to your cost of sales, that's going to let you know if you're actually going to be profitable from the beginning. If it costs you more to create or provide your services or sell your products than you're selling them for, then we know we got a problem. We either need to increase our income or we need to decrease our cost of sales. However, that's our two of our key indicators right there. So your income, you generating your sales. Your cost of sales, your cost of goods sold is what it costs, the hard cost directly associated with your income. Now, for this particular line item, it's quite easy for those who are in retail, restaurants, things like that, because you're buying something and then you're selling it in either a direct sale or you're going to be putting it together to create something new that's going to be sold out. Very simple. For service-based businesses, it gets a little bit more complicated because sometimes it takes us a while to identify what is directly associated with our cost of sales. Prior to the change that they had in QuickBooks with the Pro Advisors, in most situations, business owners didn't have their own QuickBooks. So for me to own the QuickBooks software, as for me providing the service to buy that software every year, so I always had the current version, that was a direct cost. Because other than that, if I wasn't providing accounting services, I probably wouldn't be buying the software every year. I'd buy it whenever I had to upgrade it at the time. So that would be a direct cost for me as a service provider. In tax preparation, prior to the pandemic and even prior to that, I've become like practically a paperless whole system. Paper kind of freaks me out and makes me sad, so to speak. So prior to me making this transition into a paperless system, I used to buy particular folders that I would put my clients' tax returns in. So those are separate from any folders I might use for my general office supplies. So those were directly associated with me providing my tax services. My tax software, also a direct cost of me providing my tax services. So for those of you who are service-based, it might be a little harder to identify it. It might take you some time to kind of review through your history and see how things are going. But to be able to know what is your direct cost, that's crucial. It's a very crucial part about being able to truly lead your business so that you know exactly where to make some adjustments. The next type of accounts underneath the profit and loss accounts are your general expenses. So this is where it doesn't matter. They're not going to be directly tied to your income. So for example, going back to the tax software, I wouldn't have a tax software expense if I didn't have tax preparation income. When we're talking about your operating expenses, we're talking about rent. We're talking about your cell phones. We're talking about your general office supplies, your auto expense. If you're someone who doesn't do a lot of travel, that's not directly associated with your generating an income. That's what we're talking about. Insurance, interest, things like that. That's what's the leftover. So what I was saying before is if it costs you more to generate your income, then you're definitely not going to have enough money for anything else. And that anything else is probably also including paying yourself. So making sure that you understand what is actually in these categories is important, because what happens with a lot of business owners is they miscategorize a transaction and then it pops up on the wrong report and it's not an actual reflection of their business. Don't worry, we're going to get to that a little bit in a little while. So the next category of expenses are your balance sheet accounts. These are your assets, your bank accounts, your savings accounts. If you have inventory, your inventory. For someone who bills clients and you have accounts receivable, it's your accounts receivable. It's your equipment, your big high ticket equipment. It's your buildings, it's things like that. Those are your assets, the things that you own. And then you have your liabilities. Those are your credit cards, your lines of credit, your loans. Those are, vendor accounts that you have, your bills, your accounts payable. So if you're someone who, and I'm hoping that you all are, or at the end of this presentation, you'll consider it, where instead of getting your bills and kind of open them up and put them in a drawer, You actually total them out so you know exactly how much you have that you owe out to your vendors, all your vendors. That includes your insurance, that includes your utilities, all of those things. Is being able to keep track of that. Those are all liabilities. Those are things that you owe out to other people. And then you have your equity. This just represents the ownership in a business. So when you as a business owner put money into the business and you're a sole proprietor, or even as an entity, if you put money into the business to invest it into the business so it can get started with no intention of it actually being pulled out as far as, repaid directly, then that will be your equity. Also, your net income, what you have left over in the business over the life of the business, all of that is what's going back into the business, and all of that is considered your equity. We'll get a little bit deeper into that, but this understanding these types that your accounts are separated based off of your financial reports is crucial. Your financial reports, as I said before, they're part of your scorecard. So if your reports aren't accurate, that means your scorecards aren't accurate, which means you're not playing the game the best way to play the game. You might even be losing and not even know that you're losing. And we don't know how to fix it because we would need to go in and make sure we can clean all that up. So let's get a little bit deeper into the financial reports. So the profit and loss, that is a summary of income and expenses over a period of time. FYI, profit and loss and income statement are interchangeable terms. So a lot of situations, you might hear someone say, I need an income statement. You might hear someone else say, I need a profit and loss report. They're the same thing. I've had so many clients who will email me or like, they're asking for a profit and loss and an income statement. Like, yeah, it's the same thing in all technicality. And so everybody gets all freaked out, and it's like, so they're interchangeable. So understand that unless someone gives you a specific definition of how they're separating the two, no, they're actually the exact same thing. Okay, so in case you've been freaked out on that before. But a profit and loss is going to always be over a period of time. How much money did you how much money did you earn, and how much did you pay in expenses last month, last quarter, last year, year to date? It's going to always be a period of time. However, your balance sheet is a picture of what's going on right now. What's the value of all the things that you own, the cash in your accounts, the accounts receivable that's due to you, the value of your equipment and buildings and things like that, your assets? How much do you owe right now to all of your vendors, your bills, your outstanding loans and liabilities and credit card balances? And then how much has gone into the business, or the difference, which is the equity? It's always a snapshot as of 12/31, as of today, as of last month. So your profit and loss is going to be over a period of time, and your balance sheet is going to be a snapshot where we are right now. So let's get a little bit deeper so we can kind of see how this goes. So you have your profit and loss. We're talking about taking your sales, and then we deduct out your cost of goods, or your direct sales, your cost of sales, and then we subtract out your operating expenses, and that tells us what your net income is, how much you have left over. Now, again, this is where it gets a little bit tricky, because if you're categorizing things incorrectly, you might be assuming that you're paying more in expenses than you actually are, and then now your net income is incorrect. Here's an example. Sole proprietors are not able to count the money they pay themselves as an expense. That is an equity transaction that takes place on the balance sheet. So when you're looking at your numbers and you go, oh, I paid myself $20,000 last year, we're going to come to someone like me or a tax preparer, and they're going to go, yeah, we have to back that out. So you now have more in net income than you actually thought. And since we know businesses pay taxes based off of their net income, that might be one of those shockers for you, because now we're recalculating your taxable income because we were mistakenly categorizing a transaction, a decision, the wrong way. Another place where a lot of business owners make that mistake is when they're paying their auto loan. Now, the fact that I said loan to let us know that's a balance sheet transaction. The interest that you pay is a profit and loss because interest is a expense, but reducing the liability, that's a balance sheet transaction. So when you're paying, unless you have a lease, if you're paying an auto loan, that is a split between a balance sheet transaction, reducing that liability, and the interest, which is going on the profit and loss report. So when you go back and look at things and you're recategorizing, you might find that your business is way more profitable than you actually thought. because the what's left over, that's an equity that lets you know how much you've got to go back into the business, which means that's how much you can use to pay down a loan. This is how a bank is going to look at you to determine, are you a good risk? Because if at the end of the day you didn't make enough money to cover your bills, then how are you going to have enough money to cover your liabilities? If we're looking at it from a tax standpoint, again, you're assuming that you spent more money than you actually technically legally did from the accounting and tax standpoint. And legally, yeah, because taxes are laws, they are actual laws that we have to adhere by. If you didn't legally spend that much money, then that means your tax liability is going to be recalculated and probably going to be a lot higher than what you were anticipating, which tends to lead to stress, which tends to lead to either your business shutting down or you operating so horribly because you can't see where things are going, and you no longer have the passion for that voodoo that you do so well. So understanding the financial reports is so crucial. These are some of your core stats that you want to be able to look at and understand. Hey, are we making profitable decisions? Are we just looking at how much money we have in our bank account and deciding, oh yeah, let's go do this? Well, okay, we can, but how does that going to affect other things that we have coming on? Are we going to be able to pay our bills? Are we going to pay our staff? Are we going to pay our rent? Maybe not. So we want to make sure that when we see cash, we know that that's just something separate. That is not telling us about our actual profitability. It's not letting us know if we actually made good decisions. There's just money in the bank, which might have just shown up at a good time. However, if you had a bill due on the 1st, but you didn't get cash into the bank until the 10th, that's you see there's a little discrepancy there, right? But it's not saying that you made money. It's also not saying that you lost the money. It's just saying that there's cash in the bank. So be able to isolate those two and say, okay, how much am I generating? How much did it cost for me to generate it? What else did I spend money on? And what do I have left over at the end of the day? And then we can compare that to, okay, so how much money is in the bank? How much is owed to me, especially for someone who does invoicing, and how much do I have in value of assets? And then again, how much do I have in liabilities? What do I owe people? These things, once they come together, they actually start to help you develop your key performance indicators for accounting. So we're talking about here, when we're talking about your accounting KPIs, is we're measuring the financial health of your business. So your financial reports are saying, hey, here's here's the activities that you've been doing, and this is what they result in. What you've generated, what you have left over, and what you have in assets versus your liabilities. Now our key indicators are letting us know if that's working. That's where we're taking that information and turning it into our more detailed, our more broken down stats, should I say. Talking about profit. What's your profit? What's your profitability? Cash balances. When I work with a lot of my clients, that's one of the first things that we do is we establish our minimum cash balances, because we know that as long as we have that amount in the bank, then for the most part, we should be good if we didn't collect any money over a period of time. That's our safety nets. Also, the value of our assets. How much do we have in accounts receivables? That could be beneficial to us because there are places that will let you borrow against your accounts receivables. So if you're low on cash, but you know cash is owed to you, you can go to a particular lenders and say, hey, can I get an advance on this that's owed to me? And then once I collect, then I can pay this back. Your liabilities, understanding how much you have in credit cards, lines of credits and loans. The way I function with my business is I tend to keep a operational credit card, and that's what I charge my day-to-day expenses on. And then when I collect cash from my clients, when I collect payments, that's what I use to pay down my debt. So monitoring my cash balances and monitoring my credit card balances are crucial to me. Those are my key KPIs, my key performance indicators. If my balance on my operational card is getting too high, that means I'm probably not making very good decisions, or I made those decisions based on the expectation that they're going to generate more income down the line. That's where strategy comes into play. So you're looking to see, where's my wiggle room? What can I do with this information? And then how can I make basically a gamble on these decisions to help me get to my overall outcome of profitability, my overall outcome of being able to hire staff, my outcome of being able to move my business into its own facility. We want to make sure that the decisions that we're making are going to lead us to those goals. And if they're not leading us there, then we need to look at our stats to figure out, where are we making bad decisions? Where are we not being the CEOs of our organizations? Where are we technicians having entrepreneurial seizures as opposed to being business owners who are running an organization? Does that make sense? Is that good? Is that triggering? Did you blow anybody's brain or anything like that? We're all good? Okay, great. Accounting becomes an interesting tool if you understand the benefit of it. Understand where the tracking actually leads to. You know, understanding the why, I guess, if you had to put it into its actual proper place, you're understanding the why. If you can understand the why of it, then it all comes together and you're able to use it correctly. Why do we need to have good accounting? Well, let's start with one of the biggest ones, as I said before, is IRS, taxes. It's legal. It's a legal requirement. Tax law is literally a law. You know, if you're going 35 in a 15-mile-per-hour zone, that's illegal. You know when you're doing it, and you keep an eye out, and you want to make sure you're not getting caught, as well as making sure you're actually not doing it. So tax law is the same way. If you know that you cannot spend money out of your business in this format, let's figure out how we can do it. There's a strategy for that. You need to pull money out of your business. Well, the IRS has this whole pamphlet, this whole book that lists all the ways that a business can have expenses. They have several different credits and codes that are able that you're able to use as a strategy, so that you can allow the hard work that you're putting into your business give you the best bang for your buck. So you want to be able to use accounting as the strategy to live at your level, but the equivalent of Jeff Bezos, the equivalent of all of the other big CEOs. They're playing this game. And the information on how to play the game is not just regulated to them. It's regulated to everyone. Everyone has the ability to play this game at the level that they want to play it. The whole point is just being able to make sure that you are understanding the rules and you are playing it to win. Okay, good? All righty. So as I was saying, how do you then use accounting as the strategy? So I had created the strategy plus accountability success system. What this means is we identify what is it that we are looking to get to. We have our goal, and then we outline a strategy. You're going to outline a strategy on how we're going to get there. And then we're going to use our scorecards to help us track if we're getting there, so that we can get to the success level that we want to get to. So having this success system allows you to identify and solve problems. Cash is low. Okay, let's look into our list of prospects that have given us their email addresses, or people that we've met at networking events who said they were interested. Have we started moving them down our sales process and through our sales funnels? Our cash is low. Hey, let's go see who owes us money. Let's go give them a little nudge and say, hey, remember that invoice that I sent you that was due today? Can I expect payment on that? You'd be very surprised how many times business owners who are just like you, stuff just goes out their mind. They totally forget about it. Give them a little nudge. Next thing you know, you got money in your bank, right? So we're able to find and identify problems while they're still small, before they become a situation where I got to figure out, do I pay my staff or do I pay my rent? Do I pay my staff, or do I buy the equipment that I need so that I can build my business? It allows you to capitalize on opportunities. If you get presented with an opportunity to buy some more inventory, or you get an opportunity to bring in staff, you want to make sure that that's actually a good decision to make. If it's not a good decision, we don't want to make that gamble unless, again, it's a strategic plan. And more importantly, the system puts this information at your fingertips. You're not spending income-producing time trying to organize your income and expenses so you can figure out, is this a good idea to make this decision? You put your system together, and now within a click of a button, click of a mouse, you can see exactly if this is a good time to make any moves. You can see exactly what's going on in your business so that you can make plans moving forward. So the system is identifying what it is that we're tracking. So that's going back and looking at that chart of accounts for the categories. What are we actually looking at, and how does it relate to how our business functions? collecting that information. It needs to go somewhere. It can't just be out in the ether. It can't be receipts just flowing around. It can't be bills just in unopened bills and drawers. We need to make sure all of that's being collected into one container so that we can then next analyze it. What is this information telling us? This is the reports. This is generating the financial reports. This is saying, okay, this is how much we're generating. This is how much it's costing us to generate that in sales. This is what we have left over. These are the debts that we have. This is what's owed to us. We want to analyze all that so we can see what it means. And then next we want to say, okay, so based off of our goal, let's strategize a plan. Let's figure out what pieces we're going to put where, how we're going to use the resources that we have available to us so that we can get there, and then we implement. We get things going. We start to actually do the work. And this becomes the consistent story of our lives as business owners. We're going to go through this cycle. We're going to continue to identify what are we tracking. Because as your business expands, as it changes, as you grow as a business owner, as everything starts to evolve, we might be tracking some different things. Collection, does our container right now fit? Was it made for how our business was, and do we need to get something that's better for where our business is right now? Analyzing. Before, when you started your business, you might not have been really thinking about lending or buying properties or things like that. Now let's analyze what all this new stages of our business, what does that mean for us? And then our goals are going to change a bit, which means our strategy is going to change a bit. How you got to where you are is going to be different than what you're going to need to do to get to where you want to be. And then the implementation, the accountability, the keeping track of it so you know what's going on, so that you're operating at that CEO level, so that you are running your business the way that things go. So before I was telling you guys about how much I hated baseball. I thought it was like the stupidest sport in the world. I really did. I didn't understand it. Like, how long is this guy gonna be up there swinging at balls with his bat? Like, I don't get it. Like, where does he go at this point? Like, what do we do? And then when they taught me to keep score, and then everything changed. I have a bit of a bias. So my husband would always coach our youngest son's team. And every year he was always the top ranking coach. His ability to motivate his players to do their best was uncanny. It was amazing. And I was able to see how that was able to happen. I was looking like, oh, he has this lineup. He has these players going in this order, which means that if they do what they're supposed to do and the defense, isn't as good as we hope they are, then we probably have about five guaranteed runs right now. And if we can do what we need to do on defense, that means we know these 5 guaranteed runs should be outnumbered the other team's runs because we're doing what we're supposed to do. So now I see his strategy, and then I know how things are going. So then when we have players who are sick or players who aren't going to come, I know he's going to revamp his lineup to account for that. So now my youngest son, we made all of our sons play all 3 sports. My youngest son stayed with baseball. He actually plays baseball now right up north for college. And it's so funny because he'll tell me the stats of his games. And I go, oh, wow, that was a good game, huh? He's like, yeah, it wasn't up until the 9th inning, though. That's when everything got real good. I can see the stats, and I know exactly how the game went without even having to see the game. I also now have a full appreciation for watching the game. Never thought I'd do that. I was at Fatburger the other day, and they had the Dodger and St. Louis game up. I was getting ready to walk out, and I saw who was coming up the bat. I was like, oh, I know what his stats are. Let me see how that's going to go. And I got ready to leave, and I saw the next bat. Like, oh, wait, I forgot that was the lineup. Let me watch and see that one. I actually have an appreciation for the game, a game that I thought was the just most ridiculous waste of human energy ever. I never understood America's sport. What? Seriously, baseball? Not going with it. Now I get it. I also get why they call it the thinking man's game, because there's a strategy to it. There's a way to play this game so that in the long run, you are the dynasty of that sport. So I want everyone to be the dynasty of the game, the sport that you're playing, the business that you're playing, because you deserve it. And in order to do that, you get the opportunity to learn how to use your numbers as a strategy to build, lead, and grow your business. So I want to thank you all for this amazing opportunity. to present to you. Here's some information in case you have some questions or there's some things that you would like for more clarity on. Please feel free to go to my website. You can schedule a one-on-one free consultation with me to talk about numbers. That's my direct email as well as my direct number. I would love to answer any questions that you might have. And based off of the presentation at this moment, I would definitely love to answer any questions that any of you might have had over the course of me kind of yapping for like 45 minutes. Just yapping. If you have any questions, please feel free to put it in the chat or to unmute yourself. I will be happy to answer any questions about how this might have tweaked something in your brain, or, just if you want to even know how did I survive having 3 sons and, I'm still here kind of thing. Sons are a tough one, I tell you. And then here's other ways that you can get in touch with me. You can reach me on social media, Facebook, LinkedIn, Instagram. These are my handles. For the most part, they're all my name. So if you are interested in coming to see my interesting little world, I would be happy to invite you in and play with you. Again, thank you so much, you guys, for the opportunity to be here to present. I appreciate you guys for being here and spending this lunch hour with me. And if there are no other questions, then I will turn it over to Robin. Back over to Robin. Oh, wait, Natalie. Yeah, sorry.
Sorry.
Sure.
I'm using my phone, so I'm not familiar with the little buttons on here.
Right.
So yeah, my little mind-blowing episode that I had was so my business is healthcare and disability services. So I'm one of those where it's difficult to make those categories tangible, like you were talking about. So when you mentioned that your accounts are basically telling you what the health is of your business, it occurred to me it's like triage. It's triage for your business, right? So you look at all the different elements, and those different elements are telling you what the health is and what direction you need to go to correct it if there is an issue. So thank you for that. And I've watched a number of different webinars on this topic over the last few years, and I it's not lost on me how difficult it is to give a snapshot, a meaningful snapshot of this stuff in such a short period of time. And I just feel like you did it really, really well. So again, thank you for that, because it can be really overwhelming. Right, it's a lot of terminology, and if you're not familiar with it, it just becomes such like a head scratcher, and you end up leaving the webinar saying, "Wait, what? What did she say?"
Yeah, you feel like you're listening to Charlie Brown's Teacher, right? Wah wah wah.
Yeah,
wah,
right. Lastly, do you have any contacts in the state of Washington who would be a good resource for accounting or tax purposes up here, or do you practice tax accounting?
I practice nationwide, actually.
You do?
I go where the fun is, so I play the game wherever the field is set up to play, so to speak. So that's been one of the small benefits that have come from COVID, is the realization that you don't actually have to be in-house to do this.
Yeah.
It's really about creating the right systems around it so that it works.
Okay. That's good to know. Thank you.
But I mean, there's so many ways of doing this. So if there are any questions, any way that we can, make this something where you're able to get what you need, just give me a call. We can kind of brainstorm some stuff and see what we can put together for you.
Yeah, the main issue is, so originally from Southern California, have a tax preparer we love, absolutely love, and he has been doing our taxes ongoing since we moved here. But when I told him, I think that I can no longer have an out-of-state business. I think I need to form a Washington corporation. And he basically said, "Well, I'm out." So
yeah.
So time to search.
Yeah, our industry is making a transition. So we have some of those who are focused on the kind of more locality aspect of it. And then there's others who are looking at realizing that the world is now a lot smaller than what we thought it was.
Yeah.
and technologies and systems and things like that have now given us a lot more capability. So we are transitioning more into advisory type roles and embracing technology, embracing other systems that allow us to be of better support to our business owner clients.
Great. Thank you so much.
Thank you. Thank you. And any other questions, comments, things you want to share? And if not, now I can pass it back to Robin.
Oh, thank you so much, LaVonne, for being here with us this afternoon. That was, like Natalie said, you did a really wonderful job at creating this snapshot and making the information very comprehensive and understandable. So thank you so much for being here. And if we don't have any other questions, remember that this episode is recorded. So if you want to reference it, it'll be up on the website. I'll also send it out in an email to everyone that attended today. And thanks again.
Thank you. You guys have a great one.
Bye.
Bye.